XOP on Arca Stock Exchange. And that is the SPDR S&P Oil and Gas EXP and PR. Maybe exploration and production. Doesn't know. I know nothing. All I know is I got an alert for this little beast. And check it out. Let's start with the monthly candle chart. Let's center that. Look at that. Motion management technique. Put the price action in the center. Away from those borders. Let your imagination roam free. All right. And what I'm going to do is we're going to apply my chart trading framework like I usually do on monthly candles to see where the higher prevailing trend is going. Looking at that, where that monthly defined support is, where that monthly defined resistance is. Remember, bigger pattern within bigger patterns, smaller patterns. There's a small one here. Sometimes those smaller patterns are on the breakout lines of the bigger patterns. Sometimes they aren't. I like it. I would actually like this to pull back, maybe have a few more candles and then break out. But this could go through this line and who knows where right now. Nobody knows the future. All right, so what do we have? We had here this pattern right here. And remember, these are monthly candles. So we have about a 1, 2, 3, 4, 5, over a year of consolidation. And the implied measure move of that small pattern that broke out, confirmed last month. So the candle of April, we had a confirmed breakout, and the measured move was all the way up to here. It might hit some resistance right here, and the target is under, it was what I called walls, so support, breakdown, and now it's become resistance. So support turned resistance. So that price action is going to bring us right down under there. And actually that might be the bigger eventual pattern, maybe from here to there. But there is some resistance right here where we are right now. I'm just going to put back the alert where I took out at around the 43 level. Because what you have to look also is when I have targets that go through, that run through some resistance, sometimes it gives me, maybe I didn't draw my lines correctly. Maybe there was a smaller pattern at the takeoff. And see 1, 2, 3, 4 month pattern, 5 month, or even, and that had a breakout, bring us about to that 43 level. So maybe this takeoff pattern right here, closer, patterns that break out that are closer to the breakout have a higher probability of reaching their target. So this small target, this small pattern, closer possible targets are more probable than bigger possible targets. And eventually when we have this crazy pattern here that's going to end, that's going to morph into, maybe, then you have this crazy pattern that goes up here, and then you have to take into account in your target considerations potential resistance, etc. on that way there. So the further you are away, the more you have chances of running into resistance at different levels, either previously defined or just new resistances are going to pop along the way, hence making that possible target less probable. All right, so here we are. We have actually a breakout right here, And now this candle that's hitting the 43 level, what that's telling me is either we close above it and that's out of the way, so a few weeks left, 2 weeks left, or this could be a place where it's going to stagnate or just pull back just a little bit. And on the weekly, we might see this. So on the stand, remember, I say within 1 to 3 months after a breakout, there's usually pullback. So we're going to go look at the weekly, and this is going to be on the weekly, this is going to be a lot of candles. We'll see the breakout nice. We'll see this candle go up, and that's going to help our imagination. Maybe we're going to have a pullback back down to the breakout line. So back all the way down to 38, 37.75. And if it's on low volume, it's even better. So right there, oops, don't want to move that. So if it gets to pull back on low volume, we're going to have an occasion to buy right here for it to continue back up. And hopefully it's going to be twofold. I'm going to create that launch, that takeoff pattern right here. Consolidation pattern right under the 43 level. And then we go off that for a better rise up. Pretty cool, right? All right, let's go ahead to the weekly. Weekly. Oh, look at all those lines. Okay, zoom. So Ichimoku cloud, there's no overhead resistance. We're out of there. This was the breakout candle. Did I say this one? April. So the breakout candle was closed right about here on the monthly. On the weekly, we had the breakout. Wow, look at all that heavy volume. The breakout candle. Man. Strong volume. This is not twice the average. This one's twice, but not the average. It was a nice build-up before it. So let's focus on this one right here. So do we have a stage 2 breakout? What do we have here? This is a weekly defined resistance. Look at all the noise. Let me just remove all that stuff, guys. And since we're above the Ichimoku cloud, I'm also gonna remove that. You know what? Remove everything. Monthly. Okay. Not gonna leave the monthly. Okay, remove these targets. Bear with me. All right. There we go. Okay, cool. So now we have, and scoot that. Okay. Here's our horizontal breakout line. Tested here. There was a smaller one here, but we had the Ichimoku cloud above it. Oh. Okay. Now it's cleaner. 30-week moving average starting to go up, guys. 40 to 50% move before the real breakout, the strong breakout that's going to take you in a strong stage 2. $30. What's 50%? 15, so 45. See, we're starting to get there, 40, 50% since off that bottom. So it's good. Let that 30-week moving average really start angling up. And that's the trend. The angle, the percent, the higher the angle, the higher the stronger the trend. That's what you want to be in. Don't take a chance. I want to get in at the beginning, and no, you never want to be at the beginning, because if you got in at the beginning and you start telling people, I picked the bottom, there was an equal chance or even worse chance that was not the beginning. Probably worse chance. It wasn't the bottom, and you just got lucky. You really, really got lucky. Because the trend, if it's not angling, if it's just flat, has chances to go up or down right away, right off that flat. If it's already angling upwards, then before it starts going downwards, the trend, it has to start slowing down, getting flat, and then going down. So you see that difference? Get in on an angle of a trend, 30-week moving average, if you want to look at that to define your trend, going upwards. That means you're that far more away from a trend going downwards. Trend going downwards, price goes downwards, has difficulty to go against a trend until it slows down. So there's no valor or pride in saying I guessed the bottom or I got in close to the bottom. It's just counterintuitive, like people saying I sleep 5 hours a day, I work 60 hours. Look, if I hear somebody say that, I'm telling you, you're not being effective. You're working way too many hours to accomplish less than somebody that's probably working 25 or 30 hours, and that's sleeping is 8 hours. Cognitive thinking is just not there when you don't sleep, and you don't have the full steam of energy. So don't. It's just counterintuitive thinking. Wait for the trend to go up. More price action starts going up, the better it is. All right. So let's say I'm going to consider this the breakout candle right there. This one right here with that volume 125 million. Previous 4 or 5 weeks over 75 million. Not quite twice. And our side going upwards. This looks good, guys. Is this it? So on the stand, we had a breakout. We could have entered last week right here. And right now we're going, what's fun is we waited one more week. And now if we get to close above that 43 level, which is a monthly defined breakout level, then full steam ahead, right? Let's go back on the monthly. Okay, see, you had that breakout here, 37.50. Could have gotten here with this monthly breakout. So even on the monthly, it's been we had a breakout already confirmed from this smaller pattern. So last month we could have entered on the monthly. On the weekly, let me zoom back in on the weekly. On the weekly, we could not have entered last month because we had the breakout candle right here. So monthly confirmed, check. All right, let's wait for the weekly signal. Sometimes the weekly signal is before on the stand. Sometimes it's after the monthly candle will close. Now it happened after. Check. It happened in that second week of May. And right now we could have entered right there. So now a couple of things could happen that could slow you down before you get in. The price action has already went back up. That 43 level is monthly defined resistance. And since we like pullbacks, pullbacks are my friend, I would actually be tempted to not enter here and just wait for the pullback close to the breakout level. Close to the breakout level on the weekly. It's not going to go, which is about $39-40. I put just a little higher just in case it reaches there. And anything under, let's say 40-60, I would buy right here. If the volume goes down. So all those red candles, you want contracting volume. Sounds sweet, right? So for XOP, I would actually expect a pullback. That's how I would get in. Since I didn't enter right here, you could always enter right here. It's just you're far away. So here you enter at for whatever the price is, 43.53, and the bottom of that pattern is like all the way down here. So you could put for investor's way. So that's your risk. Make sure that's not more than 1% of your NAV you lose. And for trader's way, it would be under the 30-week moving average, under a round number. You could put it here. So a lot less. You could probably have you will have a bigger position size if you do the trader's way. If you wait for the pullback, now instead of entering all the way here at 43, you're going to enter around the 40-60 level, 40 level. Now here's your risk. So having even a bigger position size. And investors also not going to be that big. Advantage, bigger position size if you wait for the pullback, if you're patient. Advantage, if you get to see the action go back on contracting volume. That means the pullback is really healthy for that stage 2 continuation. Check. And then after that, you go back. It goes back up. There's just and you have less whipsaws. You have less everything's in your favor if you wait. Only thing not in your favor is, well, I missed out. Well, there's a whole bunch of other stocks, and that's how you deleverage or you minimize that impact, is just look at a lot of charts. Just look at 1 or 2, 3, 4, 5. You're going to fall, not for the trap, but you're going to go in here, and then the price action is going to start going back down, and then you'll start panicking. You have potential of landing on emotional landmines, etc. And that's a risk. So those, if you look at the MOT charts, and then when you look at a lot of charts, if you're lucky, because sometimes you look at a chart just at the wrong time. If we looked at this chart maybe 3, 4, 5, 6 weeks later, and we actually see those candles come in with that contracting volume, then you say, wow, cool, I'm going to get in. It's just a question of sometimes when the chart pops up in your face, and then you get in, and like, is it that random? The fact that you choose a chart and the fact that you want to play it. Sometimes I think there's some luck into that, at the moment that you look at the chart, the circumstances, where it is, where it's morphed. So make sure you really, really believe in your framework, you trust it, and everything's going to build off that. Be patient, wait. There's other charts, either that just started here, that you could have got in early on the good breakout candle, close to the breakout level, which had a monthly confirmed breakout. Or if you missed it and it just develops that way, the timing's off, then wait for the pullback. And grab those charts that have pullbacks on low volume. Those are great. All right. So XOP, definite stage 2. I'm going to wait for the pullback before entering. All right. See ya.